Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so let me go and unmute myself for the live viewers. Okay, guys, so we are recording and let's get into the charts. So, starting off with the dollar. So, we closed off Friday pretty interestingly. We've been fighting around the 104.88 zone generally, and in my opinion, we are showing signs of finally breaking down. Again, a minor breakdown, probably back towards around 104 to around 103.7. Okay, so I am looking for a slight push down back towards this ascending trend line, and currently we will be looking for a higher low structure to form around this zone here, or potentially an extended move down to then come back up back towards 104.88, and ultimately looking to tap towards this descending trend line that comes from the all-time high made in 2022, and then towards these fair value gaps here. And once we get towards this zone here and potentially towards 106.56, we could then look for another significant pullback to potentially finally break this ascending trend line we've been riding pretty much since the start of the massive move up in the dollar. Okay, so we are looking good for short-term downside, then quickly some upside, and then mid to long-term some downside. Okay, so over the next couple months, we may actually get continued downside in the dollar. So we may get a little bit of an extended rally in some risk-on assets. Again, the picture can change depending on how the Fed is going to go forward these coming months. So we're going to keep our eye on the Fed. So the dollar's picture right now can change very quickly. So we don't want to say anything set in stone. It's all probabilities. So on the technical side, looking for some downside short term, probably next week, and then some upside pretty much by the middle to end of March. Okay? All right, so let's hop into the Dow, S&P, and NASDAQ. So they're bouncing off around the general zones we expected them to. I was looking for the Dow to slightly take the low here, to slightly tap under there, maybe to grab some liquidity. It didn't, but it came just around that zone, pretty much a double bottom little structure here, popping back into this bearish fair value gap. And we are coming into the level where, we are looking for potential slowdown as we're coming back to the structure broke bearish, and then further into this bearish fair value gap. Okay, so this does again show us a hint that the dollar may weaken a little bit next week, or at least slow down, which will then give us another little push, maybe another couple days of upside for the Dow. So I am looking for us to get a little bit higher, but once we get towards this zone and really towards the high around 33,850, so 33,850, we may start seeing some resistance there, and the dollar may start strengthening from where it's at that point. Okay, so far so good with the Dow. We're looking great. I am ultimately looking for a move up and then potentially another move down to at least come back eventually towards this fair value gap here, and really generally this entire zone down here, coming back towards this descending trend line. It broke bullish, and seeing if potentially we can finally make that higher low structure from the lows of last year. All right, next is S&P. So S&P also having a great day, came right into the level, filled out the bullish fair value gap, came into 39.18. I did say this was going to be a very attractive zone, and that's exactly how it interacted with the price. We had a very beautiful move up, and this chart does imply more upside as well. We are coming in to fill in this entire fair value gap right here. So this entire bearish fair value gap is what's being tapped into. It's what we closed into on Friday. We'll see how we open up on Monday. If we should see more upside, the next level I would look out for is right here. So very small bearish fair value gap level right here. And again, it also coincides with what I'm seeing with the Dow, a little bit more up, and then the dollar should start to strengthen when it drops to those certain levels we just went over, and that's when you'll see it curl down again. Okay, so we are seeing signs where we should see a little bit more upside next week. It may take the whole week if it's a really slow week. It may just take a couple days, or maybe even just on Monday. But in the end, we're likely going to see some short-term upside going into next week. Next is the NASDAQ. NASDAQ has been very strong. I think you can attribute a lot of its strength to Tesla. So if you look at the Tesla stock, it's had a very, very good start to 2023, and we can really see that show in NASDAQ. So NASDAQ, I believe, does have a lot more downside because it is far more overextended when compared to the Dow and the S&P, but that doesn't change the fact it's been a very powerful reversal here. So look for another breach into the green zone and really coming into this bearish fair value gap right here. Again, very small, but it's going to play a role most likely, where we come into that level, start tapping into this general liquidity zone, and then we may end up weakening out on the NASDAQ as the dollar is likely to strengthen at those, small short-term support zones that we're coming into, mainly that ascending trend line. Okay, so I'm looking forward to early next week, and then we'll see how news kind of coincides with everything that's happening in the price. But beautiful moves, beautiful closes to the week for the U.S. indexes. And the Dow, particularly, is very interesting as it comes into that zone. Okay, all right. So next we're going to be looking at oil. So let's take a quick look at oil. Again, a very powerful chart. I've been warning for probably a good 6 months. Watch out for oil. We are in a general zone of, in my opinion, bullish consolidation that will likely lead to upside, and so far it's been playing out pretty much perfectly. We came into the fair value gap zones I've been warning about a couple times, actually came down to make a lower high from this structure, and I was pretty confident we would actually see higher low form here and we would break up. And in my opinion, oil is threatening that move to break up. If you look at the weekly, the monthly time frames, they are quite bullish in my opinion, and they are showing this consolidation here is showing a massive impulsive move to the upside is brewing. Okay, it is brewing. So you want to watch out for the next coming weeks. Really, in March, we're likely going to see a move in oil. Okay, so Sensei, do you mind just muting your mic for me real quick? Sorry about that. I just don't want to catch it. Yeah, thank you so much. So again, watch out for oil. And we do have our levels on the daily we want to watch out for, 85, 90. But in my opinion, if you look at the weekly, the monthly, like I mentioned, we are looking for moves back towards 95, 100, and potentially even beyond 100 over the coming year. So oil is very, very important, because remember, this will affect your life more than the Dow, the S&P, and the NASDAQ in your day-to-day spending. Okay, the oil chart's value affects food prices and transportation costs. So always watch the oil chart. It is the most important chart in the world, guys. This is the most important chart in the world because it's the one chart that affects you day to day. All right, and it's because price is going up. That means the cost of living is likely to rise with it. So be conservative, be patient, and be wise, and always, always, always keep your priorities straight, okay? So we'll keep our eye on oil like we have been for the past half a year into the rest of this year. It's gonna be a very interesting time. Now let's take a quick look at gold and silver. So gold, beautiful pullback, as expected, came exactly to the level that I said it would come into. Again, it's not magic. The reason why this level at 1800, 1808 was super, super important is because it is the most bullish structure it can make. Now, I did say if it did lose this structure, look for these lower fair value gaps down here, and it's still bullish even down here, okay? Because this entire year of 2022 was a major pullback for gold after, in my opinion, a massive run from 2018 all the way until 2020, okay? So when you have this impulsive run and you see it break, this is not the end of the uptrend. It's very important people understand how price action flows. When you have an impulsive move up, it just means that when you break that impulsiveness, that impulsive trend, you're looking to create a more stable trend. So you have that pullback to then make a higher low from the ultimate low before that impulsive trend occurred, and that creates a less impulsive trend to the upside. All right, so it's very bullish. Gold is very, very bullish. And even if it came down towards these fair value gaps down here, it'd be very bullish still. But it holding this level at 1807, in my opinion, implies that this is an extremely bullish structure that will likely lead to a move back towards 1900 shortly. Now, I'm not calling for it to break 2000, this month, next month, or even, before Q3. I don't know. But I will say we are looking prime for it. And if we do unfortunately have escalations overseas in regards to war and other conflicts, gold may finally get enough fuel and enough political power to pretty much fly past 2000. 2000 is going to be a major cap, because even though gold's not as industrial heavy used as silver, it does have industrial use case. So keeping its price sub 2000 is very beneficial for many companies. So it's not something they want to see, because it makes the value of their products go up even more. And that, again, goes in tandem with the oil chart. So we are seeing bullishness in the commodities, and the big guys are oil and gold. Next is silver. Silver having the breakdown, much more bearish topping structure than gold, which again makes sense because, like I said just before, silver has a much stronger industrial use case than gold currently, as is in most products, phones, tablets, solar panels, car batteries, etc. It's just growing in more use. So because of that, there's a big incentive to keep the price cheap. Okay, so it will ultimately follow gold, but going forward, watch for silver to completely underperform gold in the future. It's going to completely underperform gold going forward as it gets more and more used. Okay, until we can get real supply numbers on silver, which we probably never will. If we did, silver's price would probably be extremely high. Same with gold. You're gonna have it follow gold, but it will be a much more lackluster performer, unfortunately. Okay, but so far it's played out pretty well. Wicked nearly right into the fair value gap. Now I know I have a lot of doodles here. Let's just kind of remove this so we can see where it exactly got to. So just above the fair value gap zone. Okay, it did come down enough under this little wick right here to grab some liquidity, but it didn't tap right into that fair value gap. But in my opinion, this is enough. It probably got enough, especially if gold's going to have continuation. You'll likely see silver have continuation, and short term, the first level you want to watch out for is this high pivot here. So coming into pretty much this little slow down consolidation here before the next leg down is what I would look for price to get to. Once you get towards this level here, look for a pullback, and then if we're going to have a continuous move to the upside, look for a higher low structure to form somewhere around this rise up that's coming. And then this will be the first major level you're going to watch out for, $22.50 to all the way up to it's like $23, $23.50. Okay, all right, now let's take a quick look at Bitcoin, and then we will end the overview, see what's going on with Bitcoin. So full transparency, everyone, if you've been following me, I do a swing trade service, and we trade crypto, we trade stocks. It's been very good. I have been in a Bitcoin long for a long period of time. We had recently closed out. I'll explain exactly why. So we took our profits off that long, but currently Bitcoin has been performing as expected after the last monthly close. So starting with the monthly close, and this is exactly why I ended up closing my long. We were long around 18,300, 18,400 in the lemon garden. We closed our long on the closure of the monthly candle in February. Because it closed as a doji, I had warned if it did not have enough strength to close above last month's high, so that was January's monthly candle, the high that's at 23,955. February's monthly candle needed to close above that to show there was going to be more impulsive moves to the upside. So something that rhymed with the 2019 bear market rally. We unfortunately didn't get that, so I took the prudent action to close out our long, take our profits, and then observe price. So far, it's been the correct decision. Okay, so after we had this doji close, it's very likely you get a retracement after such a bullish move up in this monthly candle, and you're likely going to get nearing a 30 to 50% retracement of this bullish candle. So that means anywhere from 21,000 all the way back down to 20,000, 19,500. So this middle zone down here is what I'm looking for Bitcoin to get to. Now, this does not mean the rise for Bitcoin's over, does not mean that at all, but it does mean that we're likely building out a much larger structure to the downside on the monthly chart. So if we do hold, let's say 20,000, look for a couple months of where we're trading between 20,000 to 22, 23,000. And if it does end up having a bullish bias, the break up will be much more drastic than I expected. It will actually be more bullish than I expected. I will call into question if this is actually a bear market rally. Okay, but we don't know for sure. We could actually just see us fail here and then retrace down lower, similar to what happened up here. The only reason why it's unlikely is because the context is not the same. The context from this rise was you had an impulsive move up, trend move up, doji, then a bearish engulfing. Now we've had a pretty decent move down over all of last year, and then had a nice little reversal candle. So it's not the same context, even though it is somewhat of the same structure, 3-candle structure that could potentially be forming here. Okay, so we're going to continue to watch Bitcoin, but right now I am more bearish on it in March. But midterm, I am more bullish. Now, I am looking for it personally to get under this level on the daily first, 21,370, tap under this low, and then look for a move up, okay? So you're gonna tap under this low, grab some liquidity here, and I do think you're likely gonna have a slight move up. How slight remains to be seen. We'll have a move up, and then we may potentially start rounding off here, and you're going to start seeing a pretty common structure form on the daily, right? You'll start seeing some sort of head and shoulders kind of structure that will lead to a breakdown back towards these bullish fair value gaps, are really attacking this imbalance zone here and coming back to the descending trend line that it broke bullish and seeing if it could hold that. Because remember what I said about the dollar and its impulsive rally, oil and its impulsive rally, gold and its impulsive rally. Just because this impulsive move here broke bearish does not mean that we are going to continue the macro bear trend. Okay, the whole idea is the bulls have finally taken out the high pivot to the left, the high pivot to the left after making lower lows. Now, can they continue to have a change of character by making its first higher low structure after this impulsive rally has broken? And if they can make a new higher low at a lower level, what does that mean? That means the impulsive trend is becoming less impulsive, more stable. You have a more stable trend to the upside that could eventually lead to higher levels. Again, we have to wait and see how price action looks, but the hope is not gone if you are bullish. Okay, so if you are bullish looking for upside towards the 28s, towards the 30s, I do think it's on the table, but it's not going to be, right now at least, it does not look like it's going to be as impulsive or as rapid as it was threatening before February's monthly candle closed. Okay, all right, everyone, that is it for the overview. So I'm going to end the recording here, and then people in the live chat, we're going to talk, hang out, and if you have any questions, the rules. But if you're just watching the recording, thank you so much for watching the recording. If you can ever make it into the live, feel free, you're more than welcome. And remember, if you have any questions, always leave a comment on the video or join the Discord if you haven't. It's the easiest way to get in contact with me. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.